What is up, guys? This is The Broke Executive, and today we're going to be doing a sector deep dive on my real estate investments and what companies I'm invested in and how I view these companies going forwards, as well as I will be talking about one of two companies that I'm looking into for expanding my real estate portfolio and section within my full Robinhood dividend portfolio. So without further ado, let's just jump right in. Right here, you can see I have my sector breakdown of my Robinhood dividend portfolio and all of these sectors I'm invested in. Again, I will mention that not all of these are the sectors you tend to see and hear about. I do have sectors like telecom that is not commonly viewed as one of the main sectors of the stock market. However, the way I've decided to break up my dividend portfolio, these are the sectors I feel were important and the types of companies that I wanted to be invested in. Now, with my real estate, you can see it's one of my largest positions within my account. This is because they tend to have higher dividend payments. And it's a very steady form of income because these companies collect a very steady form of revenue. I ideally would like this percentage to be right around 15, so you can see I am pretty close to on the ball in terms of percent allocation within my account. And going forwards, I will have to grow this as my other sectors grow, and as I pour other money into my other sectors, this weighting will fall out of alignment, and I'll have to put more money into this sector. So probably not in the next month or two, but in the beginning of 2021 at some point, I am going to be looking to expanding this portion of my account. If we take a deeper look inside of my real estate sector, you can see I own 3 different REITs or real estate investment trusts. These are essentially like an ETF where there's a holding company that buys all of these buildings and then leases them out to other companies. And they offer their portfolio of buildings in the form of a stock that you can buy and trade just like any other stock and ETF within Robinhood or any other trading brokerage. You can see the 3 I own are STAG, and Welltower. That's Realty Income, one of my favorites. You hear me talk about it all the time, as well as STAG Industrial and Welltower. These are 2 other REITs that I do like just as much, but I want more of my money focused in Realty Income. That's why you can see the pie chart right here and how it's broken down. Ideally, I'd like about 30% of my real estate to be in Realty or Realty Income, which is why I was thinking about adding an additional company into this. That way I can better allocate money within my sector, and it helps keep from some of these companies being so overweight compared to the rest of my portfolio. Because right now, Realty Income is my largest holding, and I would like to not continue to grow it as fast as I have been growing my real estate in general. So by adding an additional company, I'm able to better mitigate the risk within my real estate sector for if something were to happen to this company. I'll have 3 others in this case to be able to fall back on. So as mentioned, Realty Income is in fact my largest holding within my account and within my real estate sector as well, if you'd imagine. And they are a real estate investment trust that buys and leases out buildings that you'd commonly see big chain stores in. So we're looking at like Lowe's, Home Depots, Walmarts, even 7-Eleven is one of their largest. Same thing for like Dollar General, companies like that. So these are high caliber and high, earning companies, which is why Realty Income is one of those safe dividends that you can count on and you receive constantly. Currently, it's trading right around $60, $61, and you can tell by the graph right here, it has dropped because businesses closed at the beginning of the year. But with businesses and the economy reopening, the price of Realty Income has reflected the economy opening back up. As you will also notice, the other 2 do the exact same thing. As mentioned, Realty Income is a real estate investment trust. They focus on dependable and predictable cash flow, as you can read in that little description. They currently have a dividend yield of about 4.43%. with a market cap of $21.45 billion. That market cap reflects the actual cost. If they were to sell all of their buildings, they would have $21.45 billion after all the sales of that property. As you can see, Seeking Alpha does confirm that 4.5% dividend yield. They currently pay out a dividend of $2.81 per share per year, and they've been growing this dividend for 23 consecutive years. I'm sure you guys have heard all about this based off my other videos and how I mention them every month within my sector reviews, that they do in fact pay a monthly dividend. It currently pays about 23 cents per month. I do own 6 shares, which is why, as stated, this is one of my largest holdings. And with the dividends being paid monthly, I'm able to see that money coming in and being able to reinvest it right away, which really helps with that snowballing effect and the compound interest within my dividends and being able to earn additional money based off that. The second company is STAG Industrial. If you guess based off the name, they tend to own industrial buildings and warehouses. So rather than stores like a Home Depot or a Dollar General, they tend to focus on buildings that manufacturing and industrial work tend to be in. This company tends to own buildings that are much larger and big companies will be using. Think along the lines of if a store needs somewhere to store their overstock or like their warehouses for doing online shipments, they would be leasing out warehouses and industrial zones that STAG Industrial would be owning. So that's where their revenue comes from, and that's the type of companies they own. STAG Industrial currently trades right around $30, and it does also pay a monthly dividend, as you'll see. Their dividend yield is at 4.72%. And as you can read in the little description here, they focus on the acquisition, ownership, and operation of single-tenant industrial properties. They currently have a market cap of $4.46 billion, so much smaller than or Realty Income, which is reflected in why they have a much smaller price and why they're not as well known within the investing world, and especially the dividend world. As you can see, Seeking Alpha does in fact confirm a 4.7% dividend yield. You will notice their dividend growth is only at 1 year, and that's because fairly recently they had to reduce their dividend as a result of less income coming in. This is not actually right around the beginning of the year. It actually happened a little bit sooner. Could have just been reacting preemptively, could have been a whole slew of things. But the main point is you still earn $1.44 per share per calendar year. I currently own 8 shares of this company, so I do get that monthly dividend payment coming in. If you were to look up online when this company pays their dividends, you will notice that they tend to announce 3 months of dividends at a time with all of the ex-dividend dates and the payment dates. So I'm able to look and see that I already have dividends guaranteed through, I believe it's January of next calendar year, which is really nice because I can know and depend on that dividend being able to come in at that time. I'm not left guessing days, weeks, months at a time when their next dividend will be paid. And then probably right around the end of December, beginning of January, they'll announce the next 3 months. So this company is fantastic for newer dividend investors. If you want to be able to see and know that you do have those dividends coming in, it's very nice to be able to tell that you do in fact have that money coming in the future. And it really just helps solidify, especially within me, that I know what I'm doing and just to show that my account is in fact operating the way I would like it to. The third real estate investment trust that I own is Welltower. They're a little bit different than the other two in the sense that they don't own buildings that companies use. Well, yes, they are companies, but the buildings that Welltower own is actually the properties for like retirement communities and, independent living centers. So rather than dealing with stores, they deal with a company that does a retirement home, and that's how they earn their revenue. So it's a little bit different, and it creates that diversity within my real estate sector. And it's something that I really liked and wanted to hold on to and be able to keep myself spread out. That way, if store sales fall, people still need to live. So they're able to better diversify and separate themselves within the real estate market, and it helps provide that diversity within my account overall. They currently trade at right around $65, and part of this big drop right here is when they did cut their dividend right at the beginning of the year in March. So yes, it is a pretty steep drop, but I did buy in after that. So luckily my returns are still there and shining, as well as their dividend is still being paid, so don't think it disappeared. They just had to reduce it in order to make sure that they can not go bankrupt in the process. You can see in the description for Welltower, as I mentioned before, they focus on healthcare infrastructure. So this is, retirement communities, senior housing living, as well as outpatient care. These are different, types of places that you live if you're not living at home or in an apartment. And that's kind of how I was talking about that diversity. You will notice their market cap is $27.21 billion, which is up there right around Realty Income. The reason the stock price is lower is because this company does cut their dividend, which keeps investors from wanting to be a part of it, which honestly is not a good enough reason to never buy a company. Or it's because with senior housing centers, they can't demand as high of a rent as you can with, leasing to big box stores, because these senior housing centers are only making so much money, and they have to be able to make sure that they're not price gouging and, causing people to go bankrupt and having to move out of the community. They can't necessarily charge as much in terms of rent that you would if you were renting a building out to like a Best Buy. However, it's still a very dependable income, and their dividend is in fact there. It's just a bit smaller than it was a year ago today, but like I said, that's no reason to not own this company. You'll see their dividend is right around 3.8%. I know this varies from what Robinhood says, but that's because Robinhood calculates dividend yields only when they pay out a dividend. So that number doesn't change and fluctuate like with Seeking Alpha does. That's why I tend to reference my dividend yields based off of Seeking Alpha or other external sources. And that's one of my few gripes against Robinhood, but overall, not a huge deal. You will notice their dividend growth is 0 years. That's because they did cut it back in March. And they still do pay a $2.44 per share per year. I do own 4 shares, and if you'll notice right behind my head here, the payment date is tonight or last night if you're watching the video when it goes live. So I'm sure if I were to check my phone in the next, say, hour or so, I will see that my dividend did in fact go right into my Robinhood account, and it's all there and ready for me the next morning. You will notice all of these payout ratios are much higher than a typical company would be, and that is because with REITs, they are required to pay out a certain amount of their income in the form of dividends and not just hoard it and keep it to themselves, which is why seeing payout ratios of 70 or higher is not that big of a deal compared to if you were to look at a company like, say, if Apple had a payout ratio of 70%, that'd be a little bit more concerning. You'd want to see a company that does, sales and products or services have a lower payout ratio, because that means they're able to sustain themselves. Whereas a company like Realty Income or Welltower, aside from building upkeep and paying off debts for when they buy new properties, they don't have much else that they need to be spending money on, which is why they're able to pay it out and you see a higher payout ratio. That completes the list of companies I do in fact own. You'll notice right here I have the 2 companies I've been looking at. These are both, again, REITs because they fit within my real estate sector. The top one is ACC, American Campus Communities. What they do is, rather than owning just like a normal apartment building, they do college and student housing. So rather than having, just a regular apartment, you lease it out to college students. So you're able to have a guaranteed form of tenants, because kids will go to school, they need somewhere to live. And if your school is anything like mine, the universities and colleges have terrible dorms and you want to move out. So then you get an apartment, maybe alone, maybe with some friends. Chances are, if you go to larger universities, at least one of the buildings nearby, probably within the next couple of years, is going to be owned by ACC. And they also have deals and partnerships with companies like Disney, where if you have an internship with Disney, the place you're going to be staying for that internship is actually owned by ACC. I believe they also have a deal with NASA, but don't quote me on that one. I'm not too sure, actually. And then the other company down here, that's Store Capital. This is similar to Realty Income, but rather than doing big name box stores, they do smaller stores that are still well known and can still generate enough income and revenue that you don't have to worry about them disappearing. So this would be stores like pet supply stores or like an Ashley's Home Furniture, rather than stuff like a Walmart or a Best Buy. Again, these are still good companies. It does kind of take away from the diversity that the American Campus Communities would provide. However, the way Store Capital is run, they focus so much on making sure that they have those like almost investment grade tenants that aren't the big guys who are able to bully the landlords and, argue for, better pricing because, we can just leave and, go find somewhere else. If you guys have any opinions on either of these companies, I'm sure American Campus Communities is one you've probably never heard of. It's more of a strange pick for me. I was looking into different ways to diversify my account. But if you have an opinion on one of these two and you'd like to share it, make sure you let me know down in the comments which one I should get, or let me know to get both. Like I said, I am looking to expand my real estate sector to at least one more company. I would not be opposed to owning both of these. All right, that is all I have for you guys as in this episode. As stated, this is one of my larger sectors, and this is probably one of my favorite sectors because Many of these companies, being the real estate investment trusts that I invest in, do in fact pay monthly. And I have a bit of a sweet spot in my heart for companies that pay all the time, because who doesn't like seeing money show up in their account all the time? And these companies are able to do so. And that's one of the reasons why real estate investing is such a big thing and so common and so focused upon within the dividend investing community, because who doesn't like watching money show up in their account? And if you like watching money show up in your account, you can watch stock show up in your account. When you open a Robinhood account, you'll get one free share, or you could sign up for Weevil. You get one free stock when you open the account and one free stock when you deposit $100. Both of those stocks could be worth up to $1,800, which would be the largest dividend I've ever received, if you consider a free stock a dividend. Regardless of which, it's all there. Links will be in the description for both of those. Feel free to sign up and let me know what stocks you get if you do sign up. If you'd like to continue this discussion, or you have any questions or comments, you can again put them in the description of this video, or you could hop over to the Broke Executive subreddit that will be linked in the description. Feel free to create a discussion, ask questions. I'll be around and free to answer questions, discuss, and really give better opinions and more focus in terms of questions you guys might have there. You can also follow my Instagram for the Broke Executive. I tend to do teaser pictures, screenshots of stuff that I'm up to in the investing world. I like to share what companies I buy at the beginning of the month, and it's a good way to know when my videos are posted. And with that, I'm going to ask you guys to like this video and subscribe, and I'll see you executives in the next video.